Hey everybody, it's Adrian's Dunchik CMT Charter Market Technician, and this is my honor to welcome you to the new series that we are starting on the RWAs. RWAs has been a very hot topic. Larry think as well as many other authority people, the people with authority, people with respect, people who are role models for the traditional finance and beyond. They set the bar very high. They are onboarding, absorbing the real world assets in a tokenized form, which is going to be, well, some sort of like a revolution, or is it not going to be a revolution? That's exactly what we're going to talk about on this particular episode 1 entitled Revolution Begins. And we're going to introduce each other and everybody else to RWAs. And I'm joined today by the truly prominent people, the truly top of the top, the giga chats of this industry, the people that make me feel so small every time I meet them, quite literally when I meet Michaël, quite literally when I meet Paweł as well, because I'm joined by Crypto Michaël, but Michaël van de Poppe and Paweł Łaskarzewski. And well, that's quite an interesting topic for the conversation. How you gentlemen are doing today? How is it going?
I'm doing great. I just came back from ECC, which was a very interesting event where it's also a lot about DeepIn and RWA. I've met Paweł there, so it was a good week, and I'm happy to be back in Amsterdam. I'm also happy to be playing golf during the weekend, as apparently the host of this show is currently having a new hobby which he's pursuing on a daily basis. But yeah, I'm doing well.
Okay, man, that's true. How about yourself, Paweł?
So it's great. I'm still in Brussels. I'm at UMCC. Today is the last day. We had like a super interesting meeting with Michaël and a bunch of other people from the industry, from different big organizations. And yeah, today is the last day, so I'm tomorrow going back. Unlike most of the friends who got back today, still seeing ventures, meeting companies. So yeah.
Okay, got it. I got it. Okay, so the title of the episode is actually "Revolution Begins," right? That's a bold statement. That's a bold, big statement, and we're here to introduce the RWAs concept, the real world assets, how it all positions against Web3. So, what do you think, Michaël, of this RWAs? Is this hot? Why is it relevant? How deeply familiarized are you with that?
I think it's getting really hot, but it has multiple layers. So I just came to ECC, and what I figured there is that there are a lot of Web2 founders and Web2 people eager to join into the Web3 ecosystem to decentralize either their project or their company or anything else which falls into RWA. Most of the DeepIn projects are RWA. It's just real world assets is a very broad context or like name for a lot of things. So in that sense, I think that through RWA, we get Web 2.5, where we connect Web 2 and Web 3 together and get into the next step of the revolution, of the next step of the adoption. Now, coming back to where I come from, which is Web 3 and being crypto native, there's a lot of buzz going around RWA through which it gets a wrong name or like note in the ecosystem or social media or on sentiment that you're probably going to have like a hype cycle. But the actual builders are being done by Web 2 people integrating into Web 3 instead of Web 3 guys building something in the Web 3 ecosystem. And that's just what I get out of this. And I think that RWA, alongside DeepIn and DeFi, are the three, and AI, are the four ones that you should be watching when it comes to the actual fundamental adoption of crypto.
Since we are trying to introduce the topic, and like you say, there is not only the interest side, from the just like Michaël said, from the Web 2 itself, from the Web 3 as well, to kind of like converge somehow. What would you say at all, like, what's the most important, significant part about tokenization against RWAs that catches so much interest, for instance, for the institutional investors or corporate investors? Michaël, what would you say? What catches them so hot?
Well, I had a conversation yesterday with Paweł about this. I think it's just efficiency is probably the big name for all of this, which is that the barriers are being removed for Web2 people when it comes to their own company. So if you have a online product or an offline product that is going to be decentralized, it means that it can be globally adapted. So it's a bigger market for them, which is traded 24/7. That is, I think, the biggest gateway of Web2 founders jumping into Web3. Then additionally is that if you look at RWA in general, it is combining all the stuff that has been created already in the past few years. So DeFi, NFTs, all those technology layers, all those technologies are going to be integrated into RWA as an actual use case through which you get an ecosystem that is built on revenue generation instead of fake values that everybody can just type in somewhere. So it becomes real. And that is, those are the big takeaways, I would say so.
Mm-hmm. So what you're saying is just a meme token with utility. It's just a meme token with the muscles, right?
Well, I think if you talk about meme tokens, what we reference to as altcoins are the meme tokens that we have right now. I think if we call RWAs or DeepIn projects altcoins, it is so wrong. It is just real companies being built. It just doesn't make sense. Altcoins are meme coins like Donald Trump or any of those strange names that are altcoins. But this is just blockchain being adopted into the real world.
Right on. There are many good points spoken on why at all RWAs might be the actually necessary convergence bridge between the traditional finance and the feature giving a sense to anything behind crypto that is just going to get tokenized ultimately. Let's talk about the significance in modern finance. Why is it all significant, and how it all translates to the investor and corporate sentiment, right? What do you see about the significance in the modern finance, Michaël? Why is it significant?
Well, I think it's very comparable to the answer that I gave earlier. I think it's all about, as you see on the screen as well, transparency, but also efficiency. I think that if you have an inefficient market, that it exploits a lot of risks that you have. And that is not only for the end user, but also for institutions. So as an example, if you want to purchase your own apartment, for instance, then you lack information to get a mortgage for that apartment because you have a very selective market where you can get it from, which is usually in your own town. Now, if you have DeFi connected to RWA, you might get a mortgage for somewhere else in the world that has a higher review or higher credit rate that provides a better solution for yourself just by having an efficient and transparent and open market. So I think that is the biggest impact that we will see in the modern finance, is that it's going to be more transparent. It's taking away the middleman, so it's more automated, and it becomes more global.
Okay. So global, it becomes the transparency up there is obviously an important feature. What about you, Paweł? Why do you think the RWAs are anything of significance to the modern finance, and how it all correlates again to Web3, for instance?
So, I believe that the current finance that we have, current financial markets are inefficient. There are a lot of inefficiencies. For example, if any one of us in our countries wants to buy a Tesla stock, actually we are not buying a Tesla stock because Tesla is on Nasdaq Stock Exchange. It's not on Warsaw Stock Exchange. It's not on London Stock Exchange. So we are buying derivative on Tesla stock. So with tokenization, actually Tesla stock will have a physical presence that can be transferred between different brokerage accounts. So those inefficiencies were leading the financial markets to find bypasses over years. So those bypasses were solving the issue that with blockchain and using one universal underlying layer to exchange any kind of digital asset doesn't need to be used. And another inefficiency is, like as was before and on the conversation yesterday with Michaël, is tradability 24/7. Like right now, the issue is that we cannot trade 24/7. We don't have the freedom to use the assets we actually own. We are lease takers of our assets. So with tradability 24/7, we can have the better security of our assets. For example, the oil market. Let's imagine on Friday you take short on the oil market. On weekend, OPEC cartel is cutting production of the oil by 20%. Today, you don't have a way to react, to do the damage control, to do anything. You know that you lost. You know, but you don't know how much. On Monday, when the market will open, the gap will gonna be very big, and you will figure out how much you lost. But with tradability 24/7, you can react. You can have a damage control to protect your funds, protect your investment. And today, this kind of way to sell and execute transaction is available only for the big boys. Only them can execute transactions and deal over the weekend and over the hours. You can. And the third thing is that this will bring a lot of liquidity to illiquid assets. Today in current financial market, we have assets that are super expensive, like Berkshire Hathaway Series A stock. It costs $700,000, which means no one trades on that because no one can afford for one stock. And with tokenization and fractionalization, you can split that asset into hundreds, thousands, millions of pieces. And retail customers can jump in, can buy, can trade on those pieces, which means they can bring liquidity. And this is a situation for both, because institutions can have a fee from the transactions that are happening, assets that before they were not. And from the other end, for the users, they can do this 24/7, and they can have impact on the assets and things they own, they truly own. So those are, in my opinion, the inefficiencies that tokenization and RWAs are fixing for the current financial markets.
Got it.
I want to add one thing to that, because you're describing it quite well, Paweł, in the sense that it's top to bottom. So in case of the Berkshire Hathaway stock, it is fragmented or fractionalized into smaller pieces, so smaller end users can actually start buying it, or smaller institutions. But it goes the other way around too. For instance, if you are in some country in Africa and you want to build something there, then currently you can use a crowdfunding platform that is in a currency like the US dollar, which gives a lot of risks and limitations for people to send money to the project. And there's a lot of transaction costs involved and delays and all those things. But if you have crypto or Web3 integrated to it, everybody from anywhere in the world can invest into that project, into that RWA project, and get a revenue out of that. So it goes top to bottom and bottom to top. It's both ways, making the whole global world become more interconnected with each other, giving way more opportunities for everyone to pursue their dreams, basically.
Mm-hmm. So speaking of the opportunities to pursue the dreams, right? What practical, like real life use case examples of the RWAs, of the tokenization, do you see there, Michael?
Well, I should just explain. I think that that's one of the easiest one, but I think fragmenting real estate is one that I really enjoy a lot. I think that is also, it's a tricky one, because real estate is the most visible one in the world to see, hey, that can be tokenized. But when you want to tokenize real estate, the SEC will come next to you because there is a security involved. If you create a token that is generating dividend, then Gary Gensler is slapping at your back and say, hey, you can do that. But if we start to solve that issue and we can tokenize real estate and we can fractionalize it and people can start investing everywhere that they can, we can also jump over to tokenizing equity. And I think if we tackle that, the real estate part, which is the most, as I said, the most visible example, and that's why we invest in a lot of real estate projects, then we get closer towards tokenizing everything, because then we can integrate NFTs or the contracts of an NFT into equity. And that's where we want to get with Web3. Right now we are at Web 2.5, but that is the most easy example for me.
Mm-hmm. How about the struggles, Paweł, right? Because ultimately the digital market would have a lot of struggles, and there are ultimately a lot of challenges in the at all digital asset market, like at all, just like you mentioned, the regulatory side, the security side, like so many scams going on. What, Paweł, do you consider to be the major other challenges, that you see in the digital assets?
So one of the major challenges is that, like, if we are dealing in digital assets market, from the day zero, our organization have to be, because the market is so small, have to be global, right? So we need to operate everywhere globally with users from Asia, US, Europe, Poland, Africa, everywhere. The issue that I see is fragmentation of the laws. So right now, and regulations. So different areas like Europe, US, Asia, Middle East, this and that, different regions are regulating the digital asset market in different speed. Europe already have MiCA that entered to force 1st of July this year, and part will gonna be introduced at the year. And in US, those kind of things are not happening yet. The SAC is chasing everyone. We have very good example of Binance, of CZ, this kind of things. In Asia,
shout out to CZ. Hope these guys doing
yes.
right.
In Asia, you have some countries that have been regulated, and you have a lot of that haven't been yet regulated, which is a problem, because imagine that you have a successful business that you run, it generates profit, it generates revenue stream, but at the end, the country that you are operating with, and you have the majority of revenue stream, they say, yes, but what you do is basically illegal according to the new laws that we are about to implement in a year. So the issue is that you don't know the frames you can move within. You don't know the boundaries that you should not cross. This is very fuzzy so far. In Europe, it's going to be very clear very soon, but all over the world, it's not. So this is the biggest challenge, to have adjustment of the laws of the digital asset classification, of the regulation, to be able to operate worldwide with the businesses that people are trying, like hedge funds, private markets, this and that, and to be able to provide that kind of services everywhere with a very similar set of rules and with a very similar set of regulations and laws. So that's, in my opinion, is one of the biggest struggle we're gonna face in the next few years.
What other ones? Do you see any other one that is actually just like you're fuming about, Michaël? Like, what's the most ridiculous thing that you see as a big obstacle to the digital assets?
Well, I think it's just a part of Web 2 that is either political or regulatory compliance that we need to have, or institutions in general that are connected to the governments. So the reason why they are against the decentralization and tokenization of everything is because they lose market share. So for me personally, it's quite hard for a bank account to stay or to keep a bank account. That's for one, but also I need to obtain a license in my country, in the Netherlands, which is to protect the end user for what? So I'm very conservative on that as well. And I
Against
think
making money, right? So that just you cannot
it's just
make any sense.
old governments that are just protecting what they used to have.
Oh, yeah.
They know that it's going to come, that there's a change going to come, but they will not give it away because they want to make money as well. I think that's the biggest hurdle that we need to take. Whether or not the entire financial system needs to crash down first before we get it, I'm not sure. But at least the fight has started. That's what you can see in the US as well, with the Ethereum ETF and the Bitcoin ETF, and Gary Gensler going against the exchanges or against Binance, as Paweł said, or Kraken or Lido. It's just the last sort of fights that they can do before it can be adopted massively everywhere. And that's just that's the biggest hurdle that I see.
Right on. Let's talk about the potential itself, right? The potential growth, the future implications per the graphic actually seen right now. It says that by the 2030, it's actually expected for the entire tokenized market to be not only 10% of the global GDP, which is goddamn bold statement. Also, it recommends, it actually aligns with 16.1 trillions of dollars at all, right? 10% of the market share of the GDP share per se, entirely globally. Isn't that too optimistic, Paweł?
So if we will take into account that the big portion of the financial market, so derivative mainly, because we have the traditional market, the gold market, the physical gold, and then we have the paper gold, which is like levels of magnitude bigger, and there is money in there. So if those market derivatives mainly and this kind of things are going to move into tokenization because of what we said before, tradability 24/7, fractionalization, etc., where those institutions like Citi, BlackRock, this and that, they can make money 24/7 on fees, this and that, then I don't think it's optimistic because this market is valued on hundreds of trillions of dollars. So that means that only a portion and fragment of the overall financial markets, derivative market, and the tradability that is happening right now on the TradFi side is going to be tokenized. And I believe this is going to happen also in a way that average customer will not even notice that. So I will still log into my brokerage platform. I will still buy this Tesla stock. I will still trade this oil market, but I will gonna be able to do this 24/7. But underneath, the technology will change. So we will not have anymore the transaction between us and broker and another one service provider, another one intermediate, etc., etc. It will be peer-to-peer. It will be much more simplified, and it's gonna be based on blockchain. And those companies, those brokers, those banks are going to be custodians for those users. So as Michaël said, Web 2.5, it's going to sustain with us for a very long time because a lot of people today who would like to use such a service and deal with such a market, they will not ever understand blockchain. They will not ever use MetaMask in a way that MetaMask we use on this video. For example, my mother, she's super afraid of crypto. I try to show them, how to use MetaMask, and I showed them the gas fees, this and that, and she asked me why the gas fee is so high, because Putin is not selling gas to Europe or something. So that's the level, of understanding of average people. So those people will still use Web 2.5.
That's a good joke, though.
It is, but it's true actually. So that's why for this kind of people, this Web 2.5 is going to still look in the same way as they use it before, but underneath it's going to be completely different, and that's why this big market might have a chance to appear in 2030, in my opinion.
Mm-hmm. Michaël, would you buy tokenized bonds?
Good question. I didn't expect that question at all, but
me neither. Just come out.
I think there's a thesis at some point, for a portfolio to have tokenized bonds in there. But I think to add to Paweł, ultimately it's not about crypto; it's about blockchain. I think the integration of blockchain is just more important, and that's also why we shouldn't be calling it altcoins, but actual companies. In terms of the size and the things that we just discussed, I think that there's also an important part that is connected to RWA, which is that they simply do not care about 4-year cycles. And this graph is showing it. The expansion of the market is going to be big year after year after year after year, but usually adoption goes in an exponential curve where we overstretch the valuation and then it comes back down. But it's just going to be gradual. And most of the founders are having a 10-year approach to their companies instead of a 2-year approach. So the real impact of this is going to happen at least in the later part of the 2020s towards 2030. And coming back to tokenized bonds, yes, I would buy them. If my thesis is right on them, I would have them. If I can buy tokenized stocks, I can buy tokenized commodities. I would love to have one ecosystem where I can use it all. That I don't need to go from crypto exchange to bank account to broker, paying fees everywhere to swap my assets. I just want to do it from my wallet, easy way, and doing it in the Web 2.5 world, I would say.
So I will add one thing to what Michaël said, because Michaël said very important thing, that it's about blockchain, not crypto. And why it's important? Because blockchain is like universal underlying layer to exchange. We don't need blockchain to do this. Google can do this. Yandex can do this. Jack Ma company can do this. But what is the problem? Those companies are state-owned somehow. And blockchain is not. So governments and organizations from different countries can use it in the same time. Russian companies who never use Russian or services they do not trust each other. So blockchain provides a level of trust between the organizations and not trust to each other because it's not owned by anyone. So that's why it's super important, because then you can exchange Russian Yandex stocks for Tesla stock, and you can swap this. Today, not possible at all.
Ultimately, by what Bitcoin and the entirety of the crypto has always been, to the very core, it's just been about this trustless peer-to-peer payment system, right? And that's how we circle back. That's how we circle back to the very origins. We still fight to the core, and the core is that it's not state owned, that it's not private entity owned, that it's not Snoop Dogg owned, that it's not President Joe Biden or Donald Trump owned. It's people owned ultimately. So it all comes down to democratizing investing to a large part, right? And since we have just a moment to wrap the show, having so much of the generosity and the wealth of knowledge from your side already, Michaël and Paweł, what sort of expectations you would have regarding the Ethereum ETFs coming? Is this going to be like a big change, or is this just going to be like a snap of a finger, nothing happens, not a big deal, something to leave our audience and viewers and listeners with for the food for thought? What do you think?
It's nonsense. Not important at all.
Is this okay? Hold on. So is this not important because it's actually completely irrelevant, or is this not important because people don't grasp the full understanding of what it is?
It's what I read on social media.
Okay, I got it.
No, I think if we are discussing the Ether ETF, the expectations for the Ether ETF are super bad compared to when the Bitcoin ETF launched. So people are underestimating the impact of the actual ETF. And why I'm saying so is that the impact of inflow on the price will be bigger. That's one. The second thing is the validation of Ethereum as an ecosystem, which attracts a lot of institutions to put money into the ecosystem to build on top of it. That's what I learned during this week, is that because of the Ethereum blockchain becoming more valid and compliant and secure, Web2 founders are feeling really safe building on top of that ecosystem. So there's a big gap between fundamental growth from Web2 and Web3 retards saying on social media that it doesn't have an impact. That I think the ETF is the ultimate trigger for the entire ecosystem to start growing.
And so do I, my man. And Paweł, just to cap off, right here, what would you say is the main message that we should all, as the industry, take on with the ignorance that Michaël has just shared? Is there present, right? That people are full of ignorance. How would you say, what's the golden takeaway that you want to leave them with in order to educate, to perhaps understand and appreciate the opportunity?
So I would like everyone to understand that RWAs is not a new concept. We are with RWA concept for a very long time. One of the very old RWAs that we have on the market are stablecoins, because basically they are derivative from dollars. So there is a real world asset in form of cash behind that. But over the time, the market started to split into, specializations. So we started to name things. And as the market of traditional asset that has been tokenized and put onto the blockchain started to grow up, an amount of capital that started to flow into that market, we named it real world asset. So my main thing is that we are in this market for a very long time, but right now is the main thing the main thing happen that can drive this market growth, which are regulatory implementation. So Europe is allowing you and is providing you frames that you can operate with, and US is starting to bring in those regulations right now. Of course, there is a problem that I was mentioning before, but right now is the right moment, especially giving the charts that we are seeing in here. A lot of money will flow in. Big institutions, Citibank, Santander Bank, JP Morgan, BlackRock, all the big guys, they already know, they're already building. One of the very big and famous RWAs that just happened on the market is the BlackRock Build Fund, which is RWA token on the crypto market. It has an own ticker, price chart, etc. So like if you have any kind of idea, if our listeners have any kind of idea, now is the right time to act and to build this kind of things, because most probably there are like hundreds of other people that have the same idea as you have in your head, but most probably they will gonna be further in execution, because at the end, execution, not the idea, is build the value. So that would
Right
be
on.
like,
If we do have Larry Thing with us, who is against us? Who's gonna be brave enough to stand against us? And if we have Crypto Michaël van der Poppe, and then Paweł Łaskarzewski with us, who's gonna stand against us? There are not strong enough people to combat those legends. And this is my pleasure and honor to put this show to a wrap, put this show to a conclusion, because ultimately, there is a lot to be said. Gigantic market size by 2030, $68 trillion with 30x growth in 2023 alone. Larry Thing joining on the bandwagon up there, 10% share to be owned by the GDP to be owned by tokenized assets by 2030. 18.9% compound annual growth rate. Those are just a bunch of numbers that we have discussed regarding whether or not the revolution begins, and it does seem that it actually begins. And that, ladies and gentlemen, is right ahead. The next episode, something that you're going to be able to see us cook basically behind the scenes on the unlocking wealth and the magic of tokenization. That's going to be the next topic for the next episode. And with that said, I want to thank you, Michaël, my friend, and thank you, Paweł, for coming on to this show about the hidden revolution for the tokenized RWAs. Thank you so much.
thank you very much,
Adrian.